What's up? What's up? What's up, my Mind Your Money business folks? It's me yet again with another video about what to know this week in the stock market. So I did a little research today. I just got in from work and I just jotted down a few things about what to expect and what you need to know this week in the stock market. Hopefully you guys are investing. You're not teetling the fence. You're not straddling the fence, right? You made a decision. If you're not comfortable with investing on your own, hopefully and prayerfully, you have contacted a financial advisor. You're having someone invest your money for you, or you have finally decided to participate in your company's 401k plan or the government's thrift savings plan, or you're investing into an IRA, whether it be traditional or Roth, to help further along your investment and retirement goals. So let's get into what to expect this week in the stock market. So it says here, or I have here, U.S. stocks have been slumping headed into the first full week of 2025, which ended last week, right? In the past 5 trading sessions, the S&P 500 was down more than 1.5%, while the NASDAQ composite is off nearly 2%. Meanwhile, the Dow Jones Industrial Average is lower by about 1.5%. So in the week ahead, this week, a crucial run of labor market data is set to greet investors. That's another report that's coming out that can affect the stock market. Be aware of that. Be aware of all reports. Do your research. Google is your friend if you utilize it correctly, and see what reports are coming out when. So you can help. So it will help you understand the market even more better, especially the stock market, because the stock market, it goes up and it goes down, and if you're paying attention to it a lot, it can have your emotions up and down. And the thing that you need and want to do is control your emotions when it comes to investing. Right? So again, it says in the week ahead, a crucial run of labor market data is set to greet investors with Friday morning December jobs report from the Bureau of Labor Statistics, serving as the week's most important release. It's good to know. Updates on job openings and private wage growth. How much money are people making? As well as ratings on activity in the services sector are also on schedule. These things affect the market, people. The week ahead will provide a final snapshot as well of the labor market before the Fed's next meeting, January 30th and 31st. That's when they can talk again about reducing interest rates, which is good for those of us that are investing. That means people are pouring more money into the stock market, driving the prices up. People are borrowing money at a lower rate, making things more affordable. Cars, homes. It also allows companies to borrow money to expand their businesses at a lower rate as well. But in corporate news, investors will watch for key announcements from tech companies like NVIDIA during the Consumer Electronics Show, the CES 2025 show, where Jensen Huang is the keynote speaker in Las Vegas. That's happening this week as well. So a look at labor. The labor market cooled in 2024, but the Federal Reserve appears confident in its trajectory. In his final press conference of the year on December 18th, everybody remembers Jerome, right? Fed Chair Jerome Powell described the labor market overall as good, noting that the downside risk that emerged in the summer of 2024 as the unemployment rate spiked appeared to have diminished. Okay, that's a good thing, right? The labor market is now looser than pre-pandemic and is clearly still cooling further so far in a gradual and orderly way, Powell said. We don't think we need further cooling in the labor market to get inflation down to 2%. We want to get inflation down, people. You know, someone texted me about a week and a half ago about eggs. It said eggs were like $7.50 in the grocery store. So that's why you want to invest in paper assets. You want your money to exceed the rate of inflation. Because another thing that I'm going to bring up, I remember my uncle, I think he's about 80, 81 years old. I remember a long time ago him telling me when he was a kid, Snicker bars used to be about 5 cents. A Snickers bar right now is like almost $1.50. So the thing you need to know is that the prices of goods and services will continue to go up. They have to, because things change. They can't remain the same. So by investing your money, and if you're investing your money, let's say you're just investing into the S&P 500 and it's bringing back an average of 10% per year, you're exceeding inflation. You're beating inflation. So let's say inflation gets up to 3 or 4%. You're making 10% on your money. However, if you're not investing and you're leaving your money in the bank, you're losing. The value of your money is decreasing because the rate of return you're getting from the bank is lower than 3%, 2%. Unless you're investing into like maybe a money market account and maybe you're getting a 5% return, maybe 1% higher than inflation. But that's here nor there. Back to this. It says economists expect incoming data to show more gradual cooling. The December jobs report is expected, not for certain, but expected to show U.S. labor market added 153,000 jobs in the month, down from 227,000 seen in November. Meanwhile, the unemployment rate is expected to hold steady at 4.2%. So the labor market is on solid footing. But employment growth slowed and overall labor market conditions cooled in 2024. Morgan Stanley U.S. economist Sam Coffin, an expert, right? Not me, but an expert, because I'm not an expert, wrote in a note to clients, the good news is the labor market is not softening as suddenly as it appeared to do last summer. As of Friday afternoon, markets were pricing in just an 11% chance the Fed cuts rates in January, per the CME FedWatch tool. So they're not thinking the Fed is going to cut rates. Good thing, bad thing. You never know. So a big week in tech, for tech, NVIDIA. The CES, you remember I told you about the CES, right? Where Jensen Huang will be the keynote speaker this week in Las Vegas. And CES is the Consumer Electronics Show. Conference kicks off Monday, today, with a keynote speech from NVIDIA CEO Jensen Huang. An analyst question and answer session is also slated for Tuesday. NVIDIA stock is down more than 1% since reporting earnings after the bell on November 20th, amid concerns over delays of shipments of its new Blackwell chip. NVIDIA's shares still ended 2024 up more than 150%. Bank of America's Vivek Arya told Brian Sazi on the Opening Bid podcast Thursday that broader market forces and company-specific issues drove the sell-off in NVIDIA stock late last year. Okay. So what we have seen in the market is a rotation of money from semiconductor to software, Arya said, noting that the latter was less exposed to U.S. trade restrictions on goods to and from China. That makes sense, because I believe I was giving reports when NVIDIA was going down. Oh, there's no reason why the stock is down. There's nothing wrong with the company. Right, but they're saying here that big investors had problems with the shipping of the chip, the newest chip, Blackwell, right? And also there's an issue between the restrictions that the U.S. has on China. So he added that for NVIDIA, the last 2 quarters have not been clean. True. Really, because they're going through growing pains from one generation of product that was Hopper, true, to the next generation of product, which is Blackwell. Yeah. But no one is doing what NVIDIA does. NVIDIA currently controls about 80 or more % of the AI market. And NVIDIA is driving this whole AI technology with the chips that it's producing. And it's light years ahead of everyone else. I think the close second is AMD. And AMD, again, is nowhere near close to NVIDIA. Again, it says no Santa for markets this year, in 2024. The historically best 7-day stretch of the year for the S&P 500 came and went without any gains. Since 1950, the S&P 500 has risen 1.3% during the 7 trading days beginning December 24 amid the so-called Santa Claus rally. But this year, the index fell about 0.5%. So LPL Financial Chief Technical Strategist Adam Turnquist wrote in a note to clients that when the S&P 500 has a negative return over this time period, it usually points to a weaker year for stocks. Will that come true or not? I don't know. And I frankly don't care. I'm optimistic. I will continue to dollar cost average into the stock market. Again, in the last video that I talked about, I mentioned the word risk. There's no return if you're not willing to risk something, right? Again, that's why you have to budget, come up with a plan and budget dollar cost average into the stock market. Do not invest your bill money into the stock market in hopes that you're going to make more money. Do not invest your last dollar. Lower your debt to income ratio, get out of debt completely, live below your means, and create a budget. Create an emergency fund of 3 to 6 months of living expenses. You can even have a buffer fund or extra cash, and then you can dollar cost average into the stock market. If you're not there yet, you will get there. Just start working a plan, create a budget, know what it is that you want, and you will get it. You got it, right? So it says here, though as we noted last week, last year didn't feature a Santa Claus rally, and the S&P 500 still rose roughly 24% in 2025. So, in 2024. So I don't know how far the market falls from here. Ritholtz Wealth Management Chief Market Strategist Callie Cox told Yahoo Finance, I certainly don't assign too much weight to seasonal patterns. Just because the market is falling during the Santa Claus rally period doesn't mean that we're doomed. One key catalyst could come with next week's jobs report on Friday, January 10th, as a recent rise to the 10-year Treasury yield near 4.6% has helped contribute to the sour sentiment around stocks. Piper Sandler Chief Market Strategist Michael Kantrowitz believes relief could be on the way. We think we need to see softer employment to get rates to start coming down, he said in a video to clients on Friday. So whether the soft data comes in or later in the first quarter of this year, he believes this narrative shift from the rising rate environment could help get equities going once again. So again, even though they're saying all this, they need things to be lowered in order to get a rally in the stock market. Even though things were the way that they were in 2024, the S&P 500 still gained over 20%. It was still good. You still would have made money. My information technology stock was up over 30%. So what I did, and maybe I will share this information, the actual numbers, but I went through my portfolio and I added up my gains, and I pretty much gained about roughly 33% overall within the account, my brokerage account that I personally manage. And so now I'm going through my portfolio and I'm making changes. I wish I had made more, but I'm still learning. And I've been managing my own portfolio since 2020. After COVID hit and everything shut down, the market went down like 30%. I want to say I started investing in March, April, of May of 2020, when I had no clue. And I've been doing it since then. So yeah, but yeah, that's it. What to expect in the market. I'm foreseeing great things. I'm being optimistic. I advise you to be the same and see things the exact same way. Scared money doesn't make any money. And then again, it's not all about making money. It's just about being able to take care of yourself, furnishing your retirement account, and coming out on top. So yeah, that's it. That's all I have. I'm going to change and go for a walk while the sun is still out. So I hope you guys are having a blessed day. You had a great weekend. You're investing in the stock market. You're doing your research. Please share information that you may have of your own. Ask questions if you have any. If you need help with creating a budget, let me know. So yeah, that's all I have. Like, comment, subscribe, share this video. Let me know what you think, if you think anything at all. And also, please remember, I'm not a financial advisor. This is a disclaimer. Any and all information on my channel and in my videos are for informational purposes only. And it's just me providing and giving my opinions, right? So please consult with a financial advisor before you invest any of your money. All right, so you guys take care, be blessed, and hey, let's get at this 2025, baby. Peace.